It's like drinking from a fire hose right now. There's so much change to the tax code.
A new year also bringing new tax laws, and the pandemic is making things even more complicated for the 1040 in 2021. To answer some key questions, ABC 10 News reporter Jared Aarons went in depth with accountants to find out why some people may owe more than they expect. And that's not something most people want to hear, Jared.
Not at all, and it's not easy to figure out because the IRS has like page after page after page of coronavirus information and guidelines and all the things that changes, and it's really a lot to go through. So we asked some tax experts to simplify it for us. They broke it down into four main categories: stimulus checks, unemployment, PPP loans, and retirement savings.
This year, folks' lives just changed so significantly, and so their tax situation changed significantly.
Nathan Rigney is H&R Block's main tax research analyst. He says taxes in 2021 will look a lot different for millions of Americans.
Each taxpayer is going to have a few things that are very specific to them that are going to impact their taxes. And
especially if COVID hit your bottom line and you used any kind of government help to stay afloat. Stimulus checks are not taxable income, but still need to be reported on your taxes to make sure you got the right amount. You don't have to pay anything back, but you could get more if the government didn't send you everything you're entitled to. If you got unemployment, that's taxable income. The state will send you Form 1099-G, and San Diego financial analyst Brett Gottlieb says it could bring sticker shock to taxpayers who didn't set any of it aside.
But if you didn't request the voluntary withholding for tax purposes, you need to make sure to check your savings, your emergency pot, make sure you've got some money to cover that.
If you're a business owner who got a PPP loan, there's good news. Thanks to the new stimulus bill, any PPP money used on payroll or rent or other business expenses can be deducted. But it's still your job to sort it all out.
For the business owners, it's a lot. And I think the best advice is track.
And if COVID made you take money out of retirement accounts like a 401k, the IRS waived the penalty, but you still have to pay taxes on what you withdrew. Good news, that bill can be spread out over the next 3 years. With so many moving parts, tax experts say people should get their documents ready as soon as possible, whether you're filing on your own or with help.
If you haven't been tracking income and expenses all year, now's the time to go try to identify those, try to gather them so that when you go to complete your tax return, you're ready for it.
Now, if you're trying to get ready, remember companies and governments have until January 31st to send you this year's tax forms. And also the IRS has given no indication that they will extend the tax deadline this year like they did last year. Meanwhile, if you're worried about staying safe while filing your taxes from coronavirus, companies like H&R Block say that they will offer online filing as well as virtual appointments, and they're also going to have in-person appointments available if you're comfortable with it. In the Live Center, Jared Aarons, ABC 10 News.